Chevron understandably has passive income investors interested because of the healthy 4% dividend yield it offers passive income investors. But there's more to the stock than just the dividend yield. So in this video, I'm going to evaluate Chevron stock and answer where I think the stock price could be by the end of 2024. So let's take a look at the numbers and let's answer that interesting question.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So one of the factors I'm going to need to make this stock price prediction for Chevron is the current trading price. And as of this recording, Chevron is trading at $150 per share. That's down from the highs of nearly $170 per share, but up from the lows of around $50 per share in the immediate aftermath of the pandemic. So that's one of the numbers I'm going to need. I'm going to need a few more. So one of the next numbers I'm going to need is its valuation, its forward price to earnings ratio. As of this recording, it's trading at a forward PE, or I should say a price to earnings of 13.18. It's traded at a higher valuation before. It's also been lower at points in time before. However, this 13.18 is roughly the average valuation it has traded for going back the last 5 years. It's around the area I suspect its valuation will remain going forward. Another number I need is Chevron's expected earnings per share in 2024, and that's this number here. $12.56 is what Wall Street analysts expect Chevron to deliver in 2024. Of course, these are analysts that are following Chevron stock and all of the factors that go into Chevron's earnings per share. And it's their estimate of earnings per share. Now, this is a consensus estimate, meaning there's multiple analysts that submit their forecast for what they think Chevron's earnings per share will be. And this $12.56 number is a consensus from all those analysts. Of course, nobody knows precisely what's going to happen in the future. This is just their best estimate of what they think could happen in 2024. Now, if we combine the earnings per share estimate of $12.56 for 2024, let me fix that on the fly, and a price to earnings of 13.18 as we saw here, then Chevron's stock price could reach $165 per share by the end of the year. And if you were paying attention, you remember that the stock price was $150 per share as of this recording. So an increase of $15 per share would be a 10% increase in the stock price, which I think Chevron stock investors would be happy with. In combination with its dividend yield, that would be a solid return for Chevron stockholders. This isn't a company that's going to double your money overnight or over the next few months. And so a 10% return plus a dividend yield of 4%, I think would be an excellent return for Chevron stock investors. However, there's other scenarios that might happen. What if the price to earnings was to increase to 14.5? Then that could mean the stock price could rise to $182 per share. $182 per share. Right now it's at $150, so that would be a $32 increase, or roughly 22% increase, plus a dividend yield, which would mean an over 25% increase. Now, what would be some of the factors that would increase Chevron's valuation or the price that investors are willing to pay? Well, one major factor is the price of oil. As of this recording, crude oil is trading at about $78 per barrel. And if that price increases, then investors would be willing to pay a higher price for Chevron, because then its expected earnings for the next year would be better than what it is for this year. If there is more uncertainty, more instability in regions that have a lot of oil production, like the Middle East, then that would increase the valuation for Chevron stock, as it stands to benefit from a decrease in supply of oil, and so thereby the price of oil is expected to increase and increase the desirability of Chevron stock. So those are some of the factors that go into the valuation Chevron stock. Of course, I didn't talk about OPEC, the Organization of Petroleum Exporting Countries, and if they make a decision to cut oil production, that would increase price and thereby increase desirability for Chevron stock and increase its valuation. Those are some of the primary factors. Those are not all of the factors that go into desirability for Chevron stock. And if any of those factors work in its favor, then the valuation could increase. It could go even higher than 14.5. The valuation could increase to a PE of 16, which would increase the stock price to $200 per share. That would be a meaningful rise from the current share price, although I don't suspect this scenario to be very likely. Additionally, there is some downside scenarios that could move Chevron's stock price lower. All of the factors that I mentioned earlier could go in the opposite direction. OPEC could decide to increase oil production. The price of oil could decrease. There could be a settlement of all of the issues surrounding the Middle East, Israel's uncertainty with how they're proceeding with the war in that region, the attacks by Houthi rebels in the Red Sea. Those uncertainties, if they were to resolve themselves and there would be an agreement, that could cause a decrease in oil price, which would cause a decrease in desirability for Chevron stock, which could cause the price to earnings to fall to 10, which could lead to the stock price falling to $125 per share. Additionally, some of the company's internal factors could change, right? Free cash flow over the last decade, you see its free cash flow has been falling significantly as Chevron has had to spend capital on increasing, on updating maintenance, depreciation, and needs to update those wells and add additional wells to increase production for oil. And so free cash flow has been decreasing. If now free cash flow increases in 2024 as a result of higher oil prices, as a result of a decreasing need for capital expenditures, all of that would be positive news for Chevron stock investors, which would then increase the valuation for Chevron. Right now, you could see oil is a cyclical commodity. It goes up during good times, it goes down during bad times. It's understandable, right? When times are good and there's lots of jobs being added, there's lots of production, there's lots of movement, and that causes an increasing consumption for oil, which then increases the price for oil, which is then good news for Chevron. And then there's downtimes when the economy is falling, growth is decreasing, which means people are traveling less, people are going to work less often, there's less production, there's less use of oil, and thereby decreasing consumption and decreasing the price of oil. So it's very cyclical, and Chevron follows that cyclicality, as you could see here with its cash flow fluctuating up and down with the cyclical nature of the economy. But if I was to give my estimate, my base case for where I think Chevron stock price will be by the end of the year, I suspect it will be in this base case we looked at here, where earnings per share comes in at $12.56, price to earnings stays around 13, and the stock price ends the year at the range of about $160 per share to $170 per share, higher than where it is today, but not by all that much, a roughly double-digit 10% increase from the current price point. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.